Good morning. This is the Corporate and Administrative Services Committee meeting for the SERD on the Sunshine Coast. I'd like to acknowledge that we're meeting within the territory of the Shuswap and Squamish Nation. And we have an agenda in front of us. Are there any additions or deletions to the agenda? Don't see anything, so I'd like a motion to adopt the agenda as presented. Moved and seconded, all in favor? Thank you. And we have a delegation with us today, Mr. Paul Fripp, BDO for Canada LLP, to present the audit for the regional district. So over to you, Paul.
Thanks very much for having me. Good morning, everyone. My name is Paul Fripp. I'm partner in the Assurance Services Department for BDO Canada. Here to present the audit results report for the Sunshine Coast Regional District's financial statements for the year ending December 31, 2019. Copy of our report was circulated as part of the package. I do apologize. I don't have the page numbering that you will have in your report, so I will be referring to the page numbers that are part of my report, so I do apologize if there's any confusion. I'm going to start off by providing an overview of the status of our audit, and at this point in time we have substantially completed our audit, pending the completion and receipt of a few administrative matters, which include the receipt of the signed letter of representation from management, a review of events subsequent to year-end up to the date of financial statement approval, which will likely be today's date, and formal approval of the draft financial statements by the board, which those statements would have been circulated to management or to the board as part of the overall package for today's meeting. Materiality for the Sunshine Coast Regional District's audit was initially communicated to the board in our planning letter dated November 15th, 2019, and that was set at $1,350,000 for all infrastructure items, and then for working capital items, and then at $2.6 million, $2,640,000 for infrastructure items. Now, those planning materialities have been revised up to $1,450,000 for working capital items and $2,700,000 for infrastructure items. The reason for the difference between the two is that we base our planning materiality off of prior year results adjusted for events that we are aware of in current year operations. But then when we receive the final results from management in March, we update those figures based on current year actual results. Materiality, those numbers may sound large. However, that doesn't necessarily mean that there is an error or a misstatement in the financial statements of that magnitude. What materiality is it represents a threshold for the auditors to evaluate the financial statements against, and that a clean, unqualified audit opinion means that based on our testing, we didn't identify any differences or errors in the financial statements, either individually or in aggregate, that would exceed that amount. And you'll notice further down in our letter when we review the adjusted and unadjusted audit differences that they are fairly small and immaterial in nature. Moving on to page 3 of our report, going to confirm that we remain independent as of the date of this letter. Our independence was more formally communicated in our planning letter dated November 15th, 2019. There's no changes to our independence since the date of that letter. Going to move on now to page 4 of our report, where we discuss the audit findings. BDO conducts a risk-based audit approach when conducting our audit, and that means that we focus on areas where we believe that there's a higher likelihood of audit difference to occur, whether that's because of complexity in the accounting standards, policies adopted by the regional district, whether there's accounting estimates that are subject to a high degree of judgment. So the areas that we've identified for this year's audit is the recognition of grant revenue. Grant revenue recognition for local governments is a complex standard, and it's open to a significant degree of interpretation. And so as a result, we review the funding agreements and receipt of the funds to ensure that, as well as the expenditures that were undertaken in the year, to ensure that the requirements of the grant funding is met before the revenue is recognized. We didn't identify any differences as a result of our audit procedures in that area. As well, management override of internal controls. This is a mandatory audit risk for all entities because it acknowledges that management, by virtue of their position, is able to circumvent internal controls and potentially manipulate accounting records or financial reporting. To discharge this risk, we examine general journal entries for unusual descriptions or unusual amounts for any indication of potential bias, and from there we review source documentation and discuss with management to determine if there's a sound business rationale for those entries. We also examine adjustments or transactions that occurred outside the normal course of business for the regional district as well. And we didn't identify any matters to raise to the board's attention today. The liability for landfill closure is an area that we spend a good amount of time on, and that's because this is also a complex area. It requires a significant amount of estimation, reliance on experts, and we, a fairly sizable liability is recorded in the regional district's financial statements as a result of these the reports and calculations provided by these experts. And so we review these reports for the various inputs that go into the landfill liability calculation. We evaluate those inputs and the valuation that was conducted by management. Based on the testing we performed, we didn't identify anything to raise to the board's attention. Staff compensation. This is the single largest type of expenditure for the regional district, and it covers many employees, many departments, and it's also an area of scrutiny by users of the financial statements. And so as a result, we recognize that even small errors or gaps in processes can create a fairly large difference if it goes undetected for a period of time. So we focus our testing here on the internal controls, and specifically around the approval and recording of time and salary information within the payroll system. And then we conduct analytic an analysis of the overall payroll data to ensure that the gross figures presented in the financial statements are within expectations. And we didn't identify any exceptions raised to your attention. The last as I mentioned in our previous meeting, although I guess I recognize that other members on the phone may not have been participating in that meeting, but subsequent to December 31, the World Health Organization declared a global pandemic known as COVID-19, and as a result, that's had a very significant impact on the regional district's operations, as well as the broader communities surrounding and interacting with the regional district. And so these events do pose a potential risk to cash flows and for any entity, really. As a result, we've discussed with management their assessment of the likely impact of this event on the regional district's operations, and we've reviewed the investment holdings and the reserves values to see really if management's assessment overall is reasonable in the circumstances. As a result of that assessment, we have recommended note disclosure to the financial statement, which was adopted by management, and you'll see that in the draft financial statements that was circulated in the package. Moving on to page 6, it relates to internal control matters. We have no internal control matters to raise to the attention of the board. As well as on page 7, other required communications, and you'll see that there's no other required communications that were identified throughout the course of our audit. Our appendices, I would like to review 2 of these appendices with the board today. The first, Appendix A, on page 9 of our report, is the summary of adjusted and unadjusted differences arising from our audit. So the unadjusted difference relates to reclassification between a receivable and a payable listed on the financial statements. This has an effect of grossing up assets and grossing up liabilities, and so the recommendation was to reclassify to net those 2 amounts out. You'll see against our materiality figures that this is quite a small number. It also has no impact on the statement of operations, the annual surplus, or the accumulated surplus presented in the financial statements. And so we agreed with management that this amount was immaterial to record. The summary of adjusted differences, we identified that there was an amount paid out post-year end, but it was recorded as if it was paid out during the year. It just relates to a very, very small timing difference. We're talking about a couple days. And as a result, technically, the cash was still in the bank at December 31st, and the liability was still present. And so an adjustment was made to increase cash by the amount and increase the liabilities by an equivalent amount. As well, we identified a fairly small difference, an entry that was booked where deferred revenue was recorded for grant funding that was, it wasn't grant funding, but arena rentals that weren't yet paid. And so you don't effectively have a deferred revenue amount until it has been collected. So we recommended an entry to net those 2. So a reduction of the liability and a reduction of the accounts receivable. All these 3 entries are for financial statement purposes. There's could be very good reasons, particularly with the deferred revenue and the accounts receivable, for management to continue to record them in their subledgers the way that they have, and that's primarily for tracking purposes. Moving on now to Appendix B, which is a copy of our management letter. I'd like to note that just because we bring things to the attention of the board does not suggest that there are issues within the finance department or the regional district's operations as a whole. These are observations that we've made throughout our audit in an attempt to add some additional value and hopefully enhance internal controls and operations beyond just purely the audit. The first item on here, it relates to an upcoming standard, Public Sector Standard 3280, related to asset retirement obligations. And so for the year ended December 31, 2022, there is a requirement of the regional district to record all liabilities related to assets in place. So a few years back, we had a standard come in called contaminated sites, and all local governments were required to assess whether any environmental liabilities existed related to assets that were not in productive use. And so that would have been standing land or perhaps abandoned industrial sites or old mill sites, things of that nature. And those were valued and placed on the statement of financial position. So Public Sector Standard 3280 really completes that project and places that over all of the existing infrastructure. And so there's, even though the risk is potentially low to the regional district, there's still quite a substantial process for management to go through to evaluate whether that risk is low. And should any risk areas be identified, some costs to undertake to assess what contamination or retirement obligations may exist, and to evaluate whether it meets the threshold of recording those in the financial statements. And so 2022 sounds like a long ways away, but 2022 is when it needs to be presented on the financial statements, but the regional district will have to know that similar number for 2021 as well as 2020, which is the opening position for these adjustments. So we would just encourage that management continue to formulate a plan for the implementation of this new standard. It's going to be one that you don't want to approach in the very last year, and the board can support management in this endeavor. The next point is around the continuity of controls in the new COVID-19 environment. And so as we've seen many organizations transition to a reduced workforce or a substantial portion of the workforce working from home, what we've identified is that normal accounting processes and normal control systems are now being modified at a very rapid pace. And because of that, it opens up opportunities and gaps within these systems for errors to occur. But also, if the situation itself presents, it hits off all of the key areas in what we call the fraud triangle. And so that's incentive, rationalization, and opportunity. And that doesn't mean to say that any individual in the organization would necessarily do it. It just means that the temperature, if you will, is perfect for the regional district to have a fraud perpetrated against it. You combine this with different stresses on the regional district's IT systems, and many people dialing in from and connecting in externally, and it presents a real risk that something could occur, whether that's an error in accounting systems or whether that's something worse and there's a misappropriation of assets, whether it's from a phishing scheme that someone unknowingly takes to be a legitimate authorization from from a member of management. And so what we would recommend is that in spite of all these changes, that every effort is made to maintain existing internal control structures, as well as perhaps where internal controls are changing or evolving to meet current needs, that consideration of what gaps those might be creating and what risks that might open up to the regional district. And so having said all that, that's the conclusion of our audit results report. And at this moment, I would open it to the board for any questions.
Thank you very much. Are there any questions from the board? Director Hiltz.
Thanks, Chair. Yeah, I guess the COVID-19 is I'm trying to understand COVID-19 and the subsequent events and the duration that you're seeing from clients of where are clients looking at how far out we're trying to see in terms of this event. So just if you have any insight into how where people are thinking of.
Yeah, I mean, I don't know that I have a great sense of, a time frame for all of this. What I have seen, I would say, a more thorough analysis that's being conducted, and just so we're clear, I think management has been conducting a fairly thorough analysis. What I'm going to be describing is what I would characterize as sort of a best practice is really around multiple scenario analysis and sensitivity analysis, particularly focusing in around cash flows. And so when we talk about the impacts of COVID-19 and how early on we are, and it feels like economists are sort of changing their predictions daily. There are a number of different economic models that they believe that the economy is following, and there's the V and the U and the W and the L, and just to sort of describe a little bit what that means is, a V, for instance, is a sharp recession followed by a sharp recovery, whereas a U would be a slightly prolonged recession followed by a recovery, and a W would be sort of a double impact, and people are talking about that one in the case of successive waves. And I think there's so many variables out there, it's really challenging for organizations to accurately predict. And this is where forecasting and using scenarios and sensitivity analysis is helpful, because then you could take these different plausible scenarios and say, okay, well, we've got operations shut down for the next 3 months. What happens if by Christmas we're shut down again? How is that going to impact our cash flows, for instance, relative to the obligations to meet your debt obligations, for instance? So that's what I would really recommend in that arena. If there's a desire to sort of improve the sense of comfort over what's coming, because you can take those worst case scenarios, and if you can see that, okay, well, we'll take a hit, but we'll be okay even in this worst case scenario, that's a lot of comfort. And it also allows you to as circumstances become clearer, you can start to shed some of those assumptions and start to build some certainties into your models as well. So I know I didn't exactly answer your question, partly because I can't really, I'm in the same boat as you in terms of how long this is going to last. And I think a lot of people are saying that it's based on, when a vaccine might hit, and if not, how many waves of this we're going to experience and whatnot. But I'd say the best preparation you can do is to give yourself as much optics over the different, best and worst case scenarios you might be facing.
And I have to say, I think over the last few weeks, what we've seen as a board is that our staff, senior leadership team, and our CFO have actually been identifying the areas that we need to keep an eye on. And as you've indicated, Paul, there's no certainty around any of these now, but they are, they've identified them and have come to us and said, these are the areas we need to watch, and we know there's going to be impacts. So I think that fits what you've been talking about.
Absolutely. And that's consistent with the discussions that we've been holding with Tina in relation to this matter. And you'll notice the note disclosure is pretty clear. It says at this time it's not determinable what the impact is. And we agree that that's the situation that pretty much everyone's in.
All right. Any other questions for Paul? All right. Well, I think you're going to hang around for a little bit, Paul, till we get through the next piece, just so you see direction we're going.
Okay, wonderful.
Thank you. All right. So I'd look to the board or the committee for a motion. One, to receive the presentations, all reports, and all communications. Moved and seconded. All in favor? Thank you. So we'll move on to Annex B. Annex B starts on page 71. And we received the report. Did our CFO wish to speak to this?
Thank you, Chair. I think that Paul has done a fabulous job of doing some overview of some of the key points that I've highlighted in the report. We have also highlighted a few other financial indicators that the board may want to discuss. And those things are such as reason why cash and equivalents have increased, some of our points about the provision for the landfill closure and the position of where we're still underfunded in that particular liability. So we've just highlighted a few items there. I also just wanted to highlight one other note, and that's related to the foreshore leases. And so as that is a requirement from the province for the head lease, and so that particular lease was undertaken, or that particular audit was undertaken for the leases for us to be reporting back to the province on that. And there was nothing concluded as a result of the audit for that. So we also did highlight the pending accounting standards. So that most certainly, just for the committee's awareness, that was one of the more significant work plan items for the corporate services division. And so with COVID-19, that has been derailed a little bit. And due to some staffing items as well. So most certainly next month, this is one of my key focuses, because we most certainly need to get on this particular initiative in time for the standard. So with that, I'll take any questions if there are any, Chair.
Okay, any questions from committee? While they're coming up with items, with regards to those pending accounting standards, could you give us any idea, just what types of assets are these going to be looking at beyond what we already have identified?
So the types of assets, and I'll most certainly welcome any comments from Paul. So what it would impact is any assets that we have a legal liability with. So that might also include things that we have a lease with the province. So I'm going to give you some examples. So our facilities will be one of the key areas. So if we have any facilities that were constructed prior to, let's just say 1992 as a starting point, most likely some of those facilities might have some asbestos in some of the construction material. So what would our liability be and when could we expect that particular liability to be, to deconstruct, to do some abatement, etc. So essentially what local governments and public entities have been doing is expensing that at the time of any modifications. So as Paul was explaining, the new standard would then have us record it very similar to the landfill closure and post-closure liability, where we would account for that future liability coming up. Another example is that we have a lease with the province for our Mason Road works site. In that particular lease, it does say that when we acquired that bare land, we've built some facilities, we actually have a fueling station there. And so if the regional district ever vacated that property, the lease requires us to return it in the state that we occupied it on the first day. So we would have to remediate the site. We would have to potentially take down, deconstruct those buildings. So as you can imagine, that's probably a very large financial undertaking. And so we would have to account for that potential future liability. And so there's a lot of guidelines, and so that's what we as staff need to start to work through, is go through all of those leases that we have and any liabilities that we might be responsible to take on in those particular instances.
Thank you. Okay, that clarifies it more. Right. Director McMahon and then Director Hiltz.
Yes, I note on page 72 that we're supposed to hold a public meeting before the end of June. That doesn't seem very likely. So what is the situation in regards to presenting our financial statements to the public?
Okay, so that is the part of the statement of financial information. So this particular adopting the financial statements, these will then form part of that particular report, which we also disclose all of our statement of remuneration, as well as our payments over $25,000. And the financial statements which are adopted today are part of that particular report. So it would then, from a public perspective, it would be in the same forum that we're having right now, because this is our new environment.
Thank you. Director Hiltz.
Yeah, thanks, Chair. I'm going to go back to that, the asset liability and the examples that the CFO was giving. So I'm going to turn my attention to like ports. If in the future a port was to be decommissioned, and you have this structure sitting out in the middle of the ocean, is that one of these liabilities that would have to be figured out in terms of cost? So will all of these facilities that have potential material liabilities be evaluated? And there seems to be an asset management aspect to that before this 2022 deadline. Those figures would be known?
So it would be for things that we may incur costs over and above what we can expect. So is there potentially creosote in some of those pilings or some of the material? So those are things that we would assess as part of the new standard. So at this particular time, we wouldn't always assume that we are going to completely decommission assets. It's what is our potential liability? And in each instance, it might be a little bit different. In the case of the Sunshine Coast arena, that is one where it's an older facility and there's some pending decisions that are ongoing. So would we decommission that particular asset, or would we just do renewal? But part of that renewal would also include, we'd have to do the same thing. We'd have to replace that asbestos tiling, and we'd have to abate. So again, it's how you approach these things. So there's just a series of questions that you have to do as you assess each and every component of the standard that it might impact. Hence the work.
Mm-hmm. Director Hiltz, does that answer your question? Okay, Director McMahon.
Yeah, I'm actually chasing sort of the same thing too. I noticed that by 2026, about over $10 million of our debt will be retired, and that includes the big ticket items like the Seashell Pool, the Gibson's Rec Center, Field Road building, and our water treatment plant. But every asset is also a liability in some ways, because by the time you get to that age, then you probably have some accumulated maintenance, long-term maintenance or replacement or whatever associated with these assets. So I take it that we budget for that in some way.
Go ahead, Tina.
Oh, most certainly we do. So not sure if you recall, but just a couple months ago, we brought forward a report in specifics to the recreation facilities. So that very detailed capital plan is part of that particular analysis for the community recreation facilities. So we're doing that for each and every service of the regional district. And so the facility planning is part of the what we call asset management, but I like to call it more sustainable service delivery, because you need those assets to deliver the service. So I guess the long or short answer is yes, we are accounting for those types of future expenditures for those facilities, either to maintain them, and or that was part of that report we did for the recreation facilities, which then further brought a project for 2020, which is the future life of the two older facilities. But we then wrapped all 4 facilities into that to also meet some of these new standards, to do the analysis for the new standard.
Any further questions? All right, seeing none, there are some recommendations on page 71. Would someone like to move those recommendations? Moved and seconded. All right, so this is that the documents be received, the final audit results and report to the members of the board, the independent audit report for Shore Leases Hillside, draft audited financial statements year ended December 31st, 2019, and that the draft audited statements per year ended December 31st, 2019 be approved as presented, and further that the recommendation be forwarded to the board meeting on April 23rd, 2020. So all those in favor? Thank you. All right, we'll move on to item 4. Thank you, Paul. I don't know if you want, we'd love to have you stay around for the rest of our meeting, and I don't know if you necessarily want to do that.
Well, I appreciate the offer, but I've got a busy day. So I'm going to say thank you to everyone and to stay healthy.
Thank you, Paul.
All right, bye now.
Bye-bye. All right, so move on to item 4, Annex C, pages 77 to 80. To that page. All right, and we've already received the report. Tina, did you want to speak to this?
Yeah, just very briefly, Chair, and this is essentially, this report is coming out of some multiple recommendations out of the budget deliberations, which were partly instilled by the police-based victims service request for funding. So there was some request to do some information search as far as what happens with traffic fine revenues for regional district. And so staff did the best they could as far as what was on the provincial website, etc. A lot of this information does not appear to be updated from the province, as you'll see. So again, on UBCM, I know they've done some work on it as well, but this is what staff were able to research.
All right, and I think this is one too on page 79. There's some older information about the District of Seashell. We do get traffic fine revenue because we have a population over 5,000 and we're paying for the RCMP. In past years, we used to use some of that traffic fine revenue and put it towards our community investment program, basically our grant and aid program. but it was difficult for the committee to identify which organizations were requesting money that actually fit inside the criteria. So we've changed that. It was changed back in 2017 and has not been updated on our website. We need to get that done. But basically what we do is we take any of the traffic fine revenue and put it directly to offset the costs that we pay for the RCMP. And our community investment program is separately funded out of our operating budget. That means that there aren't those limitations on what the funds can be used for. It just makes it cleaner and easier for our community investment program. So any questions of Tina on this report? Director McMahon.
Yeah, trying to recollect our previous discussion on this, but I take it that we were looking for options for funding police-based victim services. This also sounds like it may have been a conversation that's been held at UBCM and AVICC before. Do we know if this is something that other rural areas have wrestled with?
Tina or Sherry, probably.
Yeah, and Sherry, again, we have another, she may be able to comment on the UBCM part, but I do know from some of our regional district counterparts, most certainly when we did this report, some form of it back in 2016, most certainly this was coming to the UBCM floor. And
Sherry, did you want to talk to the UBCM piece?
Thank you, Chair. Just briefly, as I was doing the research for the UBCM resolution, I did take note there were 11 previous resolutions that have been put forward with respect to funding for police-based victim services.
Thank you. I think one of the reasons that we as a board asked for this is because police-based victim services has come to all of the governments up and down the coast here and asked for funding. And we were looking to see whether or not they were actually getting funding from through the traffic fine or through the province. So that's why we needed to see what the funding was and where it was actually going. Director Hiltz.
Yeah, my question is the traffic fine revenue sharing that returns to the district of Sechelt totally discretionary, or is there requirements on how the funds can be used?
There are requirements on how it can be used. So, for example, we have to deal with things that are crime related or whatever, right? There's certain criteria around that. Of course, the RCMP fit in that, so we just allocate all the funds there. Any other questions on this report? All right, seeing no further questions, let's move on to Annex D, pages 89 through 91. And this is with regard to BC timber sales. And I believe we're turning this over to Julie Clark.
Thank you, Chair. This report is the second report relating to BC timber sales, their 2020 to 2024 operating plan. And the report is a result of a request from the Planning and Community Development Committee to provide a technical review of Elphinstone Logging Focus's recommendations from the perspective of SCRD service areas, with a mind to which ELF recommendations could be included in SCRD's response to BCTS. So today, staff have provided the analysis requested with an emphasis on distinguishing between SCRD's technical response and advocacy efforts. And I'm here to take your questions if there are any.
Thank you. First of all, I want to comment, it very thorough, very, like you really do separate well, which is SCRD and which is other areas to look at. And thank you for turning it around so quickly. Appreciate that. So we have Director McMahon and Director Tice.
Well, I was going to say much the same thing. I liked, especially on page 85, I like the clarity that this brings to the matters around logging, tactful clarity. And it will help us to communicate this better in the community. Obviously, the directors play a role in advocating, and our board has committed to advocating with senior government. So our work is cut out for us.
Yeah, Director Ties.
Thank you, Chair. And yes, thank you. A big thank you to staff for putting together this report. I think it's been handled beautifully, and it really clarified for me some of the questions I had about where does SCRD start and where does advocacy start, and or where does SCRD end and where does advocacy start. So I think it really was a worthwhile thing to put together, and especially in such a short time. So my big thank you on that. There was a note on some different boundaries that ELF had put together as compared to what we have in our OCP, and they clarified that was sort of their artistic license that they took. So that's something to keep in mind. But I think this was definitely a worthwhile exercise, and it does give us some food for thought as to where we want to advocate in the future. I don't feel like putting anything forward at this point right now, but I think it certainly it will be a handy reference in the future.
Director McMahon?
Yeah, I was just going to ask Director Kroll whether or what comments the town of Gibsons may have forwarded to BCTS on their operating plan, and whether perhaps those could be shared as a communication.
I'll get something from staff and get it to you. I know we've had stuff in the works. We've had several presentations to council from various groups concerned about the interface between the communities and timber sales. So I will get some stuff together for you.
Thank you. During the agenda review on this item, there was a question as to whether or not this should go to board immediately or if it should come next month, given the timing of the BCTS recommendations that we're moving forward. So that would be as a question to staff.
Thank you. Staff had some quick conversation this morning as well to make a decision on that. And I think based on the recommendation in the report being directed at FLNRO, this can be held off until next month.
Thank you. All right, any further questions? And I just want to say, Julie, that I like the recommendation, and I think having them come and have this conversation with us with the background that you've provided and all of the other work that we're doing around the logging on the Sunshine Coast, I think it's a good step, a good direction to take. Director McMahon.
Yeah, I just wanted to add, of course, this was on the agenda for the Area E APC last night. And a number of members of that committee raised questions about what is this MLUP and how does this affect us and so forth. So this is very timely and appropriate.
All right, seeing no further questions, there is a recommendation on page 81. Would someone like to make that recommendation? Director Ties, Director Pratt. Any further comments or questions? All those in favor? Thank you. So we'll move on to Annex E, Gas Tax Community Works Fund Update, pages 92 through 95. Sorry, wrong mouse again. All right, and I don't see Brad on here, so is Tina speaking to this one? Yes, thank you.
Yeah, it's just for information, Chair. So if there's any questions by the committee, staff are here to respond.
Director McMahon.
Whoops, there, that's better. I'm looking forward to the upcoming report on the old gas tax projects that we have on the books. There is certainly a pent-up demand in my area for pedestrian and bike paths, which I have raised repeatedly, so you all know it. Reed Road Shoulder and the Inglis Corridor Connector being two near the top of my list. When staff are evaluating the projects, I'd just like to mention two factors that I really think we should be taking into account. One is the quality of construction of road shoulders. For instance, on Gower Point between Pratt Road and Quinn Place, the paved shoulder is dangerous due to the sudden drop-offs and bumps ups and bumps down wherever the shoulder intersects a driveway or a road that's at a different angle. So it's actually quite dangerous for bicycles. It's fine for pedestrians. But, you know, if we're going to do this, it should be done properly. I keep waiting for some tourists to not see these bumps and go falling off their bike under a truck or something. So if we can't meet, you know, good standards, then we should think twice about doing it. The other problem is maintenance. A number of areas where we paved shoulders are no longer usable because of the accumulation of dirt and mud that's buried the pavement and can't be removed by just sweeping. I don't think we can expect that the Modi's maintenance contract is going to cover any serious digging out of paved shoulders. And unless, you know, a citizen group is interested in adopting some of these road shoulders and maintaining them, we need to be pretty cognizant of where we're spending our funds. An example is in Elphinstone is the 6th Street Hill beside Bonnybrook Lodge, where the paved shoulder is completely buried now. So it was a great idea in a good location, but if we can't maintain it, then it's not a usable asset anymore. So I'm looking forward, as I said, to the report, and particularly an update on the Highway 101 fencing above Chester Creek, which is a long-standing thorn in my side. Thank you.
Okay, Director Lee.
Sorry, you surprised me. I'm quite interested in getting a couple of these projects going that are on the books, mostly for Area A. And well, I share the concern about keeping the side of the road clear for cyclists. I'm probably more concerned here in Area A for the walking paths and the creation of them. And we need to know the cost to see whether we should even keep them on the books, because some of our roads are pretty narrow and some of those bike paths could get pretty expensive, and we might have better places to spend our money. So my question is, do we have some idea of, A, could we go ahead with that? In other words, is everything in place? And B, when will we determine whether those projects are still the good ones or we should be putting new ones on the books?
Okay, and I think we'll just add to what Director Lee said when he said, is everything in place? Part of that was the agreement with MOTI. So turn over to staff.
So so on page 93, there was a board direction to go ahead and sign that particular contract. I don't know if what the status of that is. I don't know if Sherry or the CAO has any comments on that. But that would be the first step before bringing a report to the board, because there is most certainly some frameworks to those particular agreements that would then inform some of the projects that may not have been part of the contemplation in the past. So I don't know if they have any comments on the status of that.
CAO?
Thanks, Tina. I don't have. I'm not sure of the status. I'll have to check into it and get back to you.
Thank you. And then, so Director Lee, did that answer your question then?
Yeah, I was asking for a rough timeline. In other words, do we consider these active projects that we should be following up on, or is this something for later in the year, or what kind of a anticipation should we have?
And does that is that dependent on whether or not that agreement has been signed and moved forward, so that framework is in place? Tina?
Yeah, so if I could, Chair. So on page 93, there is a little bit of a table there where it says summary of gas tax funding commitments. So right now, there are no active transportation projects in the 2020 budget. So those would have to come forward again for the committee's consideration and board's approval to amend the financial plan. So there is some further work to do. Again, some of those projects that were there for several years. So again, there would perhaps have to be an analysis done on, I think, some of the points that have already been raised, some of the risk matrix, some of the new terms and conditions outlined in the new memorandum to then provide that lens. So I think there's a subsequent staff report that would need to be brought forward as far as other projects. There's also a further recommendation, I believe, to bring forward a policy on the gas tax community funds, on the community works. So, the focus historically for the regional district has been to use those funds for active transportation. However, there has been a transition to fund other types of projects, such as the Cooper's Green, part of Grantham's Hall, those types of things. So those would be part of that policy context that also would inform the board in some of those decision-making parts. So more to come from a timeline perspective. I think you can leave it with staff and we can try to report back at a future committee.
Director Pratt.
Thank you. The CFO actually just right there talked about the point I wanted to bring up, because the regional district has long had a focus on active transportation, bike and walking paths, and that's one thing I'm really curious about, is what other projects we can look at beyond the bike and walking paths, because we've had a couple of issues come up, and we are waiting on that pilot project update between MODI and AVICC on Galliano Island to see how that's worked out with the leasing of the side of the road, and before we move forward on some things too. So I'm really interested to see what other projects staff would recommend.
Thank you. Director McMahon.
Yeah, I have a couple of times gone back and reviewed the types of projects that qualify for gas tax funding. Just checking with staff, have there been any changes to those policies recently, or have they been pretty consistent?
No, they remain. And I believe last year we brought forward a report. It's been with this particular board, so I don't know specifically the time, but we did bring forward the policy and the guidelines of eligible projects and some of the criteria. So we could always forward that for further information, but there hasn't been any change.
Thank you. Any further questions on this report? Director Lee.
I guess my takeaway from this is that we need this discussion at the appropriate committee, I guess. This is a financial update as opposed to which projects we want to be working on. I guess the I would need to ask to get it put on a future agenda, probably of infrastructure services. Is that a correct takeaway for this for me?
Probably a planning and community development committee meeting is typically where most of these projects have fallen. It doesn't say that there aren't any infrastructure projects, but I guess this also highlights, you know, there are some options as to where you would fund these projects depending on the committee.
All right, so I think from staff's responses to some of our questions, they recognize that this is something that we want them to put some attention to. Not that they don't have anything else on their plate at this point, but you know, moving the agreement forward so that we can start looking at what our options are and bring that back to the appropriate committee meeting, I guess. Director Lee?
Yes. In my area, it's really long-standing because the roads are so darn dangerous to walk on, and yet people do walk on them. And I'm getting constant pressure to either get going with this or else try and get Modi to at least pave the shoulders so you can walk on them. So it's in my area, it's fairly urgent. Walking is a major form of transportation for the older population, and they are doing it, and it's extremely dangerous. I'm just waiting for one of them to get knocked over like a deer, which is not exactly something I'd like to contemplate. So I'd like to get going.
Okay, I think staff have the message. Any further questions or comments? All right, let's move on to the next item on the agenda, Annex F. Pages 96 through 101, and it's the status of the operating and capital reserves as of March 31st, 2020. Before we move into that report, I just want to welcome Chief Paul as a director here to our meeting, and just tell you our protocol is that if you have a question, that you click on the button that says raise hand, and then it will show in our participant list, and I can call on you and order them. All right, welcome. Nice to have you here.
I'm glad to be here.
Thank you. All right, so this report has been received. Any questions of staff on this report? No questions? All right, let's move on to item 8. Annex G, pages 102 to 105, and this is with regards to the 2020 Union of BC Municipalities resolutions. And we'll turn it over to Sherry.
Thank you, Chair. So further to the UBCM resolutions that were submitted earlier this year, the board requested 2 more topics on police-based victim services and the amendment of the recycling regulation. So drafts of those resolutions have been brought forward for the committee's consideration in this report.
Thank you. Director McMahon.
Yeah, these are all good topics. The ICI question, I'm wondering if we can capture the fact that the ICI regulations have a disproportionate impact in small and rural communities where commercial services may be very limited or not available at all. It is a huge problem, and I don't think the wording of the motion quite captured that.
So would you like to add another, and that in there, similar to what you just stated?
I hadn't written anything yet.
Sherry, did you capture what she said?
Thank you, Chair. So my understanding is that in the, therefore it be resolved in the solution clause of the resolution, you would like it to reflect the disproportionate impact on rural areas?
where
Yes.
private and commercial services are limited or unavailable.
I can work with staff, and we can propose an amendment to that resolution and bring it back.
Okay.
Based on that.
Super. Thank you.
Thank you. Any other questions or comments? So there is a recommendation. Would we like to wait until this other one comes back, or would you like to move the one forward at this point? Director Ties.
I feel like we can move this forward, and then they have the amendment at the board level.
Okay, so you'd like to move the recommendation as presented?
Yes, please.
Director McMahon?
Yeah, in retrospect, I think what I mean is remote and rural communities. Not so much small, it's the remote problem and rural.
Okay, so we have a recommendation in front of us. I'm looking for a seconder for that recommendation. Seconded. Any further comments or questions? All those in favor? Thank you. Moving on to item 9, Manager Purchasing and Risk Management for contracts between 50 and 100,000, Annex H, pages 106 to 107. We have already received the report. Are there any questions for staff? Seeing no questions, let's move on to item 10, Annex I, pages 108 and 109. This is Director Constituency and Travel Expenses, January through March 2020. Any questions of staff on this report? No questions. That is all of the reports. So we've already received the communications. Sorry.
I have.
Yes. Oh, sorry, Director Lee. Yes.
I was a little slow here with the button.
That's okay. That's okay.
The conclusion I was trying to understand, I think it says that we've spent all of the constituents and electrical expenses with only 171,000 left for the year. Am I reading that right? I'm right at the end of that section.
Tina?
I think that's a typo from the last report.
Oh, okay.
I'll have to verify it.
So that'll come back to the next meeting?
Yeah, it's reported on, I think, quarterly.
Yeah. Director Toth?
I was just going to say that doesn't actually look like an error if you look at the constituency expenses, the surplus versus the deficit in the travel column. I mean, those two balance out to $100 and something. So.
Director McMahon?
Yeah, it's pretty straightforward. We have underspent our constituency expenses by 13 grand and overspent our travel expenses by 13 grand, and it all comes out in the wash.
Any other questions or comments on this one? Thank you. So let's move now on to communications. Any questions on the letter from the Ministry of Municipal Affairs and Housing? Director Hiltz?
Thanks, Chair. Yeah, I'm just looking for staff to expand upon this, the phrase maintaining a strong level of capital of cash assets. What does that mean for staff?
Tina?
So I think a lot of the discussion in local governments has been about getting liquidity, and I think that's the things that we are observing in the financial markets. Hence why some of the impacts to the financial markets is a lot of people are cashing out per se. So that is what seems to be, that's how I interpret this particular comment here, is to provide yourself with cash flow options, because I think cash flow is one of the things that local governments may be faced with as far as potential delays in payments, etc. So it's just something that everybody is trying to address on a case-by-case basis, because everybody's revenues are a little bit different from local government to local government.
So last week, Thursday, the province came out with some changes for how municipalities are going to be dealing with our finances going forward. And at the District of Sechelt yesterday, we pulled together a committee, the whole meeting yesterday. We weren't planning on having one. We pulled one together because there are some implications for us as a municipality. And as a municipality, the province has indicated that we need to pay, beginning of August, we need to pay regional district, hospital district, BC assessment, municipal finance authority, like all of the various governments, except for school taxes. We do not have to pay school taxes until the end of December. And that's a way that they are hoping to increase our cash flow, given that we don't know how many of our businesses or residences in the municipality will be able to pay their taxes when they're due. We are also allowed to borrow against our capital reserves at 0% interest. And we are also looking at putting in a revenue anticipation borrowing bylaw. So while we need to pay the regional district, for example, what is owed to them, even if we haven't received the funds, we're looking at how we deal with our cash flow. One of the questions I'd have for Tina inside of that is, because the municipalities are allowed to borrow at 0% through this, does that also extend to the regional district? Like borrow our reserves internally? Is that something that regional district is allowed to do as well?
Yeah, so there was some changes, and this dates back quite a few years for the regional district, because our reserves can't be transferred from one function to the next. There was a change to the regulations where you can do internal borrowing in a regional district, but you have to follow all of the same steps. So you'd have to create a bylaw, and all this. We have actually done that before on a couple of different occasions. So you can do that, but of course, always in the case of when we did it before, you have to make sure that you don't require those particular reserves. So as an example, we used regional water reserves to fund some recreation projects. And if that was presented right now, that wouldn't be recommended by staff, because of course we're using and depleting the water reserves quite quickly for water infrastructure projects. So the answer is yes.
Right, and I guess the piece I'm wondering if it applies to regional district is because of what the situation we're in right now, they're saying that we can borrow from reserves internally. And previously, I know when that happened at the regional district, we actually paid that reserve interest. They're saying at this point, if we borrow against capital reserves, there is no interest to be charged. I don't know if that applies.
Yeah, and I think that's more a policy decision from our standpoint. So right now they're saying you don't have to charge reserve, but in our particular case, that would be something that staff would bring as a policy decision, meaning you can still earn interest on reserves. So if you are taking from one, essentially it's not like taking from a bank. You're actually taking from an existing service. So if those service participants would be okay to do that, that would be part of the contemplation for the decision.
Okay, thank you. Any further questions on this report or this communication? Okay, so let's move on to the last letter, Annex K on page 113. I'd probably turn to staff just to address the request that's in the letter and the impact on the regional district, or not, or what we can do. Tina. Sorry, Tina, you're still muted.
So sorry about that. So as you know, we've already adopted our financial plan. So the discretionary amounts for the rural grants and aids have already been set for 2020. So that particular process is underway. So we, to create more money out of here would be a 2021 decision.
Thank you. Any questions for Tina on this letter? All right, any new business coming forward? Anything new we have to add in here? So there is a motion on here to go in camera, that the public be excluded from attendance of the meeting in accordance with section 91 and K of the community charter. Like a motion to that effect. Moved and seconded. All in favor? Thank you. And then I'm going to turn over to our IT. Are there any people in our gallery?
Nope, not as of currently, nope.
Okay, so no people in the gallery. All right, so I'm going to have the IT staff move us into in camera, stop the streaming, and we're going to take a 10-minute break. It is now 10:47, so just a couple minutes before 11, we'll be back to start. Thank you. Thank you. We have now adjourned the in-camera portion of the Corporate and Administrative Services Committee meeting of Thursday, April 23rd. And I'd look for a motion to adjourn the meeting. Moved and seconded. All in favor? Thank you very much. Thank you, and we'll see you this afternoon at the board meeting. Enjoy your lunch.